Let's Talk Money.
Hello and welcome to Let's Talk Money, your weekly personal finance date with me, Surabhi Upadhyay. Term insurance is the purest form of life insurance. You pay the insurance company so that it offers financial protection to your dependents after you're gone. But do we give enough thought to this critical product that should be part of any individual's financial plan? Well, this is exactly what we discuss on the show today, and we equip you to pick the right term plan that suits your needs. I have with me today Rishabh Garg, Head of Term Insurance at Policy Bazaar, as well as Anand, President and Chief Distribution Officer at SBI Life Insurance. Gentlemen, thank you so much for joining in. I think it's a really important issue that we have at hand, and while we always talk about growing our wealth and having the right kind of investment products, we need to talk about covering ourselves well as well. And, you know, before you joined us, Rishabh was just telling me that at an industry level, when you talk about life insurance, term insurance is still a minuscule 5% of all the policies that are being sold. Why do you think that's the case? Opening thoughts.
I guess it's for the bread earner to acknowledge somewhere, saying that have I done enough to secure the needs and aspirations of my loved ones. That particular thought, I think, somewhere is not getting appreciated and not getting acknowledged, despite the fact that COVID kind of gave us a wake-up call to all of us. And time for people to make this as an essential element of whatever they do.
Yeah. So, okay, let's start with the basics. Why I think the three people here on this conversation are convinced about why this is a really important product that you have to consider. But we need to tell our viewers about this as well. So, Rishabh, you tell us, why term insurance?
I think term insurance is the purest form of life insurance, right? What does it do? It basically ensures that if something were to happen to you, if the bread earner of the family were to die, you will get a sum assured that will ensure that your family gets taken care of and the liabilities gets taken care of. Why term insurance? I think as soon as you start earning, the most important thought that you have is that you should be able to save and create an asset for yourself and retire peacefully. But in all this meanwhile, if something were to happen to you, all those dreams can kind of shatter. And hence, having a term insurance is basically like protecting that asset creation dream of yours. And hence, it is very important, according to me.
Okay. I think we also need to get a little granular in terms of explaining to our viewers how term insurance is different from a lot of other kind of life insurance policies which are out there. You have traditional plans, you have ULIPs. So from the top, to keep it as simple as possible, Anand, if you could help us out.
Sure. See, the term and if you have the other side, traditional and a ULIP comparison, both serve a bit of a different end use in the sense. A term policy is something that you pay the premium and you get X amount of life cover when the bread earner is no longer there. Yeah. However, if you look at a traditional or a ULIP, it offers a blend of an investment flavor as well as a risk cover. Typically, a term policy provides the individual with a very high level of sum assured. So it is a policy that ensures that your future is completely protected for your near and dear ones. And then it just serves that purpose.
So, like what we see in a lot of the traditional plans or guaranteed, plans or even ULIPs, that the sum assured will be a function of the amount of premium that I'm paying, X amount the premium. That's not the case with term insurance. With
term insurance also, it is a function of the annualized premium that you pay. However, what we see is in a traditional or a ULIP, most often we see a 10 times cover that goes out.
Yes.
Whereas in this, it's a number which really goes up. It's a function of how much you can pay, depending on your premium paying capacity, and then a function of how much cover you want to leave. It's all a function of, from a consumer perspective, what does he want to kind of cover, how much does he want to cover, and then to what extent has he got it covered. So it's that gap that he would like to fulfill, and that's where term comes in sits in very well.
You know, before we talk about how to go about selecting a term policy, something a little more philosophical here, which I think a lot of people also grapple with, that they're very happy to talk about products where you pay something and you get something in return. So, some sort of an investment, some kind of a return, versus simply paying for a cover, which will only come in handy when you're no more. Actually, it's a bit similar to health insurance in that sense, right? You're not getting anything on it. It's just that you're minimizing financial impact when the event happens. So, Rishabh, your thoughts on the whole sort of debate between actually just buying insurance for the sake of insurance versus doing the whole wrapper, little bit of cover, some investment, and that whole blended approach?
I think both are equally important, and term insurance basically serves a very different purpose. It's exactly like health insurance, right? You don't want to use that insurance.
Yeah.
When you're buying term insurance and health insurance, ideally you do not want to use that insurance. But if something were to happen, you will get that kind of a cover. And as Sir was pointing out, traditional and ULIP policies generally cover almost 10 times of the annual premium, right? Term tends to be in the 1,000 times multiple. So if you're paying, let's say, 10,000 rupees as a premium, you will get 1 crore cover. And that's because it's a probability of death and it's a very rare event that will end up happening. And you should definitely ensure that you get that kind of cover.
You know, health insurance, while, like you mentioned, the concepts are very similar. You don't want this event to happen, but if it happens, you want to be protected. But health insurance is booming and growing. Then why not term? What do you think is the mindset difference over here?
I think it is much more real. Health insurance, you end up seeing some kind of hospitalization happening
and
in
you
your
see it
family.
In the family.
Either your parents. So hence it becomes much more real. While talking about death is still considered to be something more tabooish in India. And hence I feel that.
No, absolutely, absolutely. You still discuss experiences that you had with your health insurer. You typically don't talk about that in terms of life insurance. Take that point. Well, we have some queries coming in as well. Viewers have written in with plenty of questions. So let's try and address some of them as well. Akshay writes to us on Instagram. Now, he is saying, what should be the ideal amount for a term plan? Now, the thing is, Akshay has not told us more about himself, like his age, dependents, whether he's married or not, because typically that is the kind of information that you would need to arrive at the right answer. But largely speaking, from a conceptual sort of perspective, how do you decide how much insurance you need?
It's a good question from a consumer perspective. So let's assume that Akshay is 25 years of age. And depending on what stage of his life cycle he is in, so whether he's single, married, and dependents and so on, assuming that he has got dependents, I'm not defining whether he's married or whatever, dependents, and he's got a working age going on till, let's say, 60. So he's got a 35 years of earning life left with him. So which means in the eventuality of something were to happen, then what is the replacement of that income that is going to be taking care of his dependents?
Okay, so think of it as replacement of
that
your
particular income,
working
that is
income.
Working income. So it's a question of, so maybe 25 to 30 times would be a more relevant case in case of Akshay who's 25.
Okay.
Let's say Akshay is 40. So then it becomes 10 times is good enough because you would have accumulated some part of your wealth, quite a few of your obligations would have reached a halfway mark. And then you have a 20 years left. So maybe it's around 10 to 15 times of your income which you need to be providing for.
So the younger you are, you need to multiply by that much more, your annual income.
More.
Yeah.
However, the point to be noted is the premium is very low when you're younger. Because your age, your health condition, your mortality factors that get built into the premium pricing is very conducive and very favorable for someone who is very young. In fact, the way we look at it is that, get done with term policy and, be free to pursue your passion. That's the way we look at it.
Let me take one more question, because since we're talking about young people and the fact that they perhaps get the best deal from the life insurance company. If you're young, you will be able to get a good policy at a very reasonable price. We have, I think, Ruchit writing in on exactly these lines. He's saying that what is the earliest age in which I can look at some sort of a term plan? And can I keep increasing my insurance cover with age? Again, phenomenal question. Thank you very much for asking this, Ruchit. And Rishabh, that's really the thing, right? When you're 25, typically the last thing you're thinking about is your death, right? And how many people to cover, and whether you'll be married, or whether you'll have kids or not, or whether dependents are your parents. You don't think about all these things. So it's a bit of a chicken and egg situation. So help us out here and, Ruchit's question too.
Absolutely. So the earliest you can buy term insurance is at the age of 18. Most insurance companies start offering a plan from the age of 18. But the challenge is that since it's an income replacement product, you should be working. So you should have an income stream coming in, which is most likely for an average individual at the age of around 21, 22. That's when they start earning. And hence, that's when they can start thinking of buying a term insurance. So,
oops, I didn't think of it. Sorry.
Absolutely. And I think, as Anand said, the younger you are, the cheaper are the premiums. So. And most people forget that life insurance is a long-term product where your premiums stay constant. So if you buy when you're younger, the premiums actually stay constant. So buying as soon as possible helps you out.
But also the other part of that question that, if I buy a term insurance, life insurance at 25 years, and I think that X amount is enough for me, as life gets more complex and I have more dependents getting added, I've taken a home loan and, lifestyle expenses are increasing, I realize that this is just not enough. The constant premium that I'm paying for X amount of cover. Then what do I do?
See, your financial planning is an evolving process as your life stage changes.
Yes, absolutely.
So what happens is at every stage, one needs to assess in terms of what is the kind of liability and obligations that one is kind of accumulating or acquiring during this journey.
Yeah.
So his question is very valid. So in fact, it's a build-up concept. So you start with an X amount of life cover because that is relevant at that stage. As you progress, let's say you go in for a housing loan. So there is an obligation that is coming in. So which means then you want to take a note of, okay, fine, if something were to happen, what happens to this housing loan?
Correct.
I shouldn't be burdening my family.
Yeah.
So that becomes the second evaluation stage where then he needs to evaluate whether the cover is adequate or not. Should I go for something more in terms of a pure term cover or a credit insurance product? One of the two. But net, am I taking care of the additional obligations that is coming in? So it's a very good question. Keep evaluating would be my advice.
But again, what are the steps? So suppose I've taken a home loan and, now I'm married and, I have a child. So obviously the obligations are increasing. Do I go back to the insurer and say, hey, I want to renegotiate terms of the policy? I don't even know if you can do that. How do I increase my cover? And what are the practices that different insurers deploy here? Rishabh?
So there are two possibilities. If you're younger, I would advise that you buy a plan which has life stage benefits kind of added into your product.
Okay.
What does life stage benefit allow? If, let's say you get married, you have a kid, you buy a house, you have a home loan, you can do a top-up on your existing cover.
Okay.
So you can increase up to 50% of your cover. So let's say you bought a 1 crore cover, you can go up to 1.5 crore, 2 crore, depending on the plan you bought, basis the life stage benefit.
Okay.
If you haven't chosen that option, it's best that you buy a new term plan, you continue with the old plan, and you add a new top-up with a new premium that you end up paying.
Okay, that actually, we have to take a break, but that brings me to another important question. You said buy a new term plan. So does it mean that you don't stop your existing plan, or can you stop the existing policy and move to a totally new product, which with a higher coverage? What is advisable and what is feasible depending on, because insurance can be fairly complex as well.
See, you would ideally not want to cancel your existing plan because, as we have seen, because of inflation, the premiums are only increasing with time, right? Since you bought an earlier cover, you would want to continue that plan for eternity. You can take an additional cover if you feel there are more liabilities that are coming your way so that they are kind of taken care of.
Mr. Anand, do you concur?
I confirm. It's a question of take the benefit of the plan when you're young. You got in at a X level. To cover the further obligation, go on to the next term plan because there will be a shift in premium rates and then continue taking the next phase of it.
Okay, so keep adding another plan if you feel your needs are increasing. Got it. We have to take a quick break on that note. On the other side, we bring you a whole checklist. So now you know you need term insurance, but what all should you ask? What all should you confirm before deciding on the policy? Back in just a moment.
Let's talk money.
Welcome back. You're with us on Let's Talk Money. And this week, we have put the spotlight on term insurance and why this purest form of life insurance is something that everyone needs to consider if you have dependents. Well, let's kind of sum this up in terms of the important things to ask before buying that term insurance policy. So, gentlemen, just to quickly go and recap, first thing is how much is the cover you need? So apart from X times your annual income, is there any other methodology that needs to be adopted?
People typically look at human life calculator, life value calculator.
Human life value calculator.
Yes. So it's a question of, at different stages, what are your requirements and obligations? Hence, are you well provided for is the answer that you typically get. If you were to simplify it, every stage of a person in terms of getting into his starting his earning stage, number of dependents, how does it change over a period of time, that is he or she getting married, and then the next set of set of asset acquisitions, then the children, then the education and so on, and then building on for, let us say, your future in terms of a retirement or a wealth creation, etc. So that's the journey that a human traverses through. in that situation, what is the requirement? What have I provided for up to a certain stage? What is left to be done? And that's where you keep kind of reassessing and saying, okay, fine, this is the kind of amount needed to really secure the future for my near and dear ones.
Okay.
So have I done enough? What more to be done? That's the evaluation.
So you can go to these, I'm sure they're available online,
It's
right?
available
You can
online.
go and sort of feed in the details and then
Absolutely.
arrive at a ballpark number that you would need. Rishabh, what else? So one is the amount of cover. Then what are the other things? What's the checklist that I should definitely, get answers to before deciding? Because this is a lifelong commitment. Literally, I'm with the insurer. The policy will be with me forever. So what do I need to ask?
I think 3 critical things. One is how much cover. 2, how long is the duration you want to cover for? Ideally, you would want to cover till your retirement, right? Let's say we are talking about a 30-year-old who is married, has kids. Till the time your kids are settled, they're married, they're well educated, I think that is what your liabilities are supposed to be. So practically cover till 60, 65, 70 is practically what you should be buying for. So that's the second most important factor that you should consider. Third big factor is what kind of riders you want to take or what kind of features you want to include, because that will decide what product you finally end up buying.
Okay, I want to come back to this point in just a bit on the features, because I know there's a fair amount of innovation happening in the industry. But before that, a very valid query coming in from another one of viewers. This is Rohit. And once again, he reaches out to us on one of the social media platforms. He's saying that he's having difficulty trusting his insurance company to honor claims. He says that I've paid the premium, I've taken the policy, but I don't know, and I've not hidden anything, but I'm not very sure if I can be confident that they'll honor the commitment when the time comes. I think this is an important question to ask as well. And Rishabh, if you could take this up first and give us some examples. Again, these are not recommendations, but insurers who have a good customer experience, a good track record with respect to settling claims. Maybe some of the just industry names, again, not product recommendations, but industry names who've built that reputation that people can look out for.
Sure. I think the industry names are kind of well out there in the market. If we talk about the top insurance companies, SBI Life, ICICI Prudential, SDFC Life, Max Life, Tata AI, all these kind of cover and have a good claim settlement ratio. Most importantly, I think it is very important for the consumer to be aware why their claim may not be honored. The only reason the claim may not be honored is because they have not disclosed something, and hence the insurance company may deny the claim because they feel that it was paramount for
like
the customer's
what?
health.
Give us an example.
It could be related to lifestyle habits. Do you smoke? Do you drink alcohol? It could be related to any kind of pre-existing disease. Do you have diabetes? Have you undergone a surgery? Those kind of details are paramount for the insurance company to decide if they want to give you a cover.
Okay. So your thoughts on this, and also because, one is paying that premium and you're hoping that you'll get the service in return. From the customer end, can we do anything to ensure that there is no bad experience by the end of it?
I'll pick up from the last point that you made. It's about the disclosure. I need to know that I'm taking this term plan for my family when I'm not going to be around. So which means I need to be completely transparent in responding to the questions, which is typically known as health questions.
Okay.
Now, those health questions ask all the basic questions. It's not a complicated thing. It's for a layman to respond. Have you undergone a surgery? It's a very simple thing. We know whether we undergone a surgery or not. And whether you smoke or you don't smoke. And disclosing that actually is ensuring that the family gets the money when I'm not there. So the transparency in disclosure is paramount.
Sure.
And then comes the next part in terms of looking at the company that you spoke about. As a customer, I need to do that.
Got it.
I need to be fair in terms of the disclosure. And then I look at the brand, whether it's a trusted brand, whether the claim settlement ratio is good. And then come down to my decision saying that, okay, fine, this premium seems reasonable. And then go for the point in terms of how much of a cover.
Speaking of reasonable premiums, you got me to the next question, the cost involved, right? And we all know that life insurance premiums, health insurance premiums have all gone up since COVID because of what we all endured. But give us sort of a ballpark rough estimate in terms of, let's say, a 30-year-old or a 35-year-old, reasonably healthy person. Today, what would be the cost of a term plan? And are these costs going to go up, likely?
See, the one is in terms of COVID very clearly, which brought all of us to an evaluation point, and the reinsurers evaluated, and hence the cost went up. and the premium pricing got impacted accordingly. And the cost will keep going up depending on the various factors. One is inflation, the other one is in terms of the mortality experiences, and so on. But let's say a 35-year-old wants to, let's say, give a 2 crore cover. And a safe assumption is 18 to 20,000 per annum.
Okay.
That's a good sum to go with, and he pays the premium for, let us say, another 25 to 30 years.
Okay.
And that's the amount.
And the premium is locked, so there is no
locked.
yearly inflation.
Absolutely,
Yeah.
absolutely. So he is locked, basis the disclosure on the health question, basis his current state, current health, and then he continues, and he's assured that that amount will reach his family once he's known that he's disclosed everything clearly and cleanly.
Absolutely. So, Rishabh, sum this up. Final checklist, everything that you need to be aware of, and also the riders that you might want to look out for when you're looking at buying that term insurance plan.
Ensure that you have the right cover, because that is the most important thing. You have to cover all your liabilities. Second, choose the right term or the tenure of the plan so that you're covered till you have any kind of liabilities left. Third, decide the right insurance company basis the claim settlement ratio, the premiums being asked for. Fourth, what kind of features you're looking for, what kind of riders you're looking for. There are some very interesting riders that come in the term insurance plan. You can buy an accidental death rider, which basically ensures that if your death happens because of an accident, you get an additional sum assured, which means that if you bought 2 crores of base sum assured and you bought 2 crores of accidental death, you get total of 4 crores. And the premiums are much lower. Because
so you can enhance your the payouts and the coverage by paying a small additional premium.
Exactly.
So that's one important rider. Any other riders, any other newer policy features we should know?
Another important rider is the waiver of premium rider, which basically ensures that if something were to happen to you from a critical illness or a permanent disability, you will be indisposed and your future income stream may suffer. If your future income stream is going to suffer, you may not be capable of paying the premiums that come in the future. And hence, waiver of premium kicks in. It ensures that all your future premiums are taken care of by the insurance company and your cover stays intact.
Okay, I think this is very helpful information and good information to keep in mind, gentlemen. Thank you so much for joining in. Lots of food for thought over here. I think our viewers can go back, reflect on this, ask the right questions, and make sure that they have complete insurance coverage when it comes to protecting their loved ones. Thank you so much for joining in. Keep sending us your comments, feedback, and queries. We'll see you with another brand new theme next week.
Let's talk money